General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Cool. Forecast done for the week. Need a picture? That'll work. Look at this sentiment. We're at the highest bear sentiment for the year, 4.73. Bullish is real low. That's crazy, right? Because we just hit all-time high. This week, based on the news, what would be the weekly profile? The bank holiday Monday, President's Day. President Trump talks on Tuesday, tentative. We don't have an exact time. As far as big news, it is given Thursday. Like FOMC minutes, it usually doesn't move the market. PMI should be a pretty big deal. So it's given late. Late week expansion based on news. Thursday and Friday brings in high impact volatility. Also, it is options expiry week. Go to Market Watch. So February options expire the 22nd. So here. Okay. Also note it's options expiry week. The Fed watch, we're sitting at 97% no change after CPI. 97% no change after CPI. So nothing is saying we finna cut rates. Earnings this week, there's no top 10. Only thing interesting is Oxy, Walmart, from my perspective. No top 10 companies reporting from NASDAQ. Commitment to traders. We do have commercials buying. Miracles. We do have commercials buying, playing the hedge for the non-commercials selling. You see, if we're not looking at the actual net positions, you can see how the commercials are heavy short and the non-commercials are heavy long, which is interesting. There are a lot more short positions. Nope. Commercials are short for the week. So this is giving us more of an average view. We are still below the zero line, so they're getting off some of their shorts. Right here, we can see commitment to trade and hedging program is in a net sale program. So it would benefit them to bring prices down to offload. Dollar daily, I think I'm gonna start doing $1, just a daily chart. Have a core look at fundamental. You can see retracements, lower price, maybe a reaction here. I'm thinking we can get a bounce. On the daily order block. It's the daily bullish order block. Maybe one day down, and then a reversal or a reaction at OB. NASDAQ monthly. No, we took January's high. And also no, we don't have a wick at the top. So we need some kind of a retracement for the month. For the monthly candle. Weekly positions, we came back to hit this old high, closed below it. Took out a ton of buy side liquidity. So no, we in premium. We took out buy side liquidity. We still inside range. I'm thinking wait for structure to look for sales. This is bullish. If structure comes down and we react off of EQ and bounce back up, we really don't even have to leave this range. It's a tradable range. It just kind of sucks. So daily, everything's bullish on the daily. We have a projection and we have liquidity up here at 22,387. I'm watching these gaps. We don't have a 3-bar swing high. Buys are strong right now. I think a lot of it is the reciprocal tariff news. Why isn't a lot a word? sit on my hands. If we retrace and use a imbalance to go higher, I have a setup. If we run buy side liquidity and CSD, then I have a sell setup. H4, kind of the same as the daily. The only thing we see clearly is that we didn't close above this old high, which was, I believe it was a weekly level. Yeah, it was. So this old weekly high we're holding here. Just still sit on your hands. Sit on your hands. We in premium. We can accumulate or consolidate or retrace from here. If we consolidate, we go higher. If we retrace, we wait for a buy. And if we retrace and retest bearish levels and get a reaction, we go for sales. Because right here it's like, all right, I don't think we just go up. Charts, it's not really saying we just keep going up. Even on this expansion here, it was choppy. Note that last expansion was choppy. Lots of wicks. The push looks exhausted. Candles are small. Short day Monday because of President's Day. That'll give us a good range to play out for the week. And then just go from there, step by step, candle by candle, news by news, Trump by Trump. All right, y'all. Y'all have a good day. Peace.